Good morning, trade pros. Welcome to our morning market update for Friday, the 13th of July, 2018. It's a spooky day. I thought about how I could play into a scary morning market update, and then I figured I shouldn't scare you. Trading's scary enough. Yeah, we just said that at the same time. That's good. All right, in today's morning market update, we're going to talk about the beginning of the second quarter earnings season and how the banks officially kicked it off. I'll give you the latest results, and then we're going to talk about what's going on with Johnson and Johnson. Pretty big lawsuit finally going through into a settlement, and the money paid out is astronomically big, and it's a pretty big thing that's happening here. And J&J is a good stock to look for some volatility. All right, so that's what we're going to talk about today's morning market update. Let's start by pulling out our passports and going for a tour around the world. Japan up 1.9% in the Asian session to end the week. Hong Kong up 0.2, China's down 0.2, and India is flat. So a bit of an equity rally in the early Asian session, and then it stalled out through the remainder to end the week. Pretty much on a negative note in Asian. Markets are negative there. In Europe at midday, London was up 0.5 percentage point. Paris is up 0.4%, and Frankfurt's up 0.2%. So European markets green across the board. Markets out of London and Paris are stronger, and German markets are not as strong. Again, on some of these issues with Chancellor Merkel's government and her coalition that she's forming. And also, a lot of tweets between Donald Trump this morning supporting the London economy in the UK by backing his relationship with Theresa May. He said he's got a very, very, very strong relationship with Theresa May. I don't know what it would have mean if he put another very in there and what levels of confidence it is, but you could assume it's at the very least very, very, very strong. And that was a tweet this morning. So UK economies, not the UK economy, but overall, maybe the pound's rebounding a little bit, and there would be some upside to it. Trump is tweeting on it, and Theresa May made a statement also. He's going in to visit Theresa May today. He'll be in the UK, Donald Trump. In the United States, Dow Jones flat, S&P flat, NASDAQ flat. Very little movement in U.S. equities overnight. I think we had a 6-7 handle rally up, and then it got faded, and we're pretty much at the close of yesterday's trade. That's a good thing, though, because equities are holding gains. No movement is a good thing at the top of a market because it's just a consolidation, and we could have a continuation. I think today might be a day where we push to some highs on equity markets, and we get a nice rip into the close, nice little ramp into the closing hour, and we're going to mark them on highs for the week. All right, crude oil is down 0.5% to $70. Now off those lows a little bit. Gold prices down 0.4% to 1242. And Bitcoin down 0.1%, still hovering near the 6,000 level. Bitcoin slowed down its movement. It hasn't really been the volatile asset it has been in the past. Looking at 10-year treasury yields, they are flat at 2.84%. We've got an awesome video coming out on the 10 2-year yield spread and how that helps you pick or predict the next recession, coming out tomorrow on YouTube at 3 p.m. Be sure to watch it. It's a very, very important video. I think it's going to be a favorite right off the get-go. I'm anticipating a lot of volume around that video. Check it out. It'll be good. All right, so this morning we had import-export prices. At 10 a.m., top of the hour, we got consumer sentiment. And at 1 p.m., we got Baker Hughes rig count, which impacts oil to a large extent. This is offshore drilling and production for supply of U.S. oil. That's kind of been peaking recently and declining due to the fact that oil prices or supply is coming more out of OPEC since they've raised and increased their supply. And now Libya's back online as well. And that's what's pushing oil prices lower, in fact. So look for that at 1 p.m. Federal Reserve is going to release their semi-annual monetary policy statement at some point today. There is no slated time for it. And that's it. So we're not really looking at too many big economic indicators. Today was a really important day. We unofficially kicked off the second quarter earnings season for 2018. And the stock market very closely watches earnings. If earnings are positive, the stock market will have no choice but to rally as institutional investors start to buy more of those companies are doing good for the longer term hold. All right, so we had 3 big bank names that reported today: Wells Fargo, Citigroup, and JP Morgan. Then we got 2 more later on. We have PNC Financial and First Republic Bank. But the first 3 were the really big ones of the day. Let me give you the results. In Wells Fargo, the company reported second quarter earnings per share of $1.08 versus $1.54 expected. Wells Fargo missed, and that wasn't a good thing for the market. However, the revenue was $21.6 billion as expected. Therefore, they probably had some expense items that you have to look through their balance sheets and income statements to identify. Return on assets was 1.1 versus 1.22% expected, so a miss there. And return on equity was 10.6 versus 12.1 expected on a year-to-year basis. Miss there as well. So Wells Fargo kind of wet the sheets, if you will. If you look at Citigroup and JP Morgan, though, they had the opposite effect. They were actually pretty positive earning releases. So their second quarter earnings were $1.63 versus $1.54 expected. Revenue was $18.5 billion on 18.4 expected, and their return on equity was 9.2 versus 6.8 year over year. Big beat in all categories. The only soft aspect of this report for Citigroup was that fixed income trading revenue was down 10%. So if you think you're having a hard time trading, Citigroup is as well. Their revenue numbers are down 10% versus the last quarter. So that's the only softness in that report. But overall, very strong report out of Citigroup. JP Morgan reported second quarter earnings of $2.29 versus $2.22 expected. And they're on revenue of $27.8 billion versus $27.6 expected. So beat there as well, and to a pretty large extent from JP Morgan's behalf. Return on equity is 14% versus 15% quarter to quarter, and assets under management is up 8%. AUM, that's a very key category for bank stocks that are also asset managers. And that's, again, a really good report on JP Morgan. So Wells Fargo doesn't really do that great, but Citigroup and JP Morgan more than offset that report. And we're going into this market with a positive sentiment based on that. And it's a Friday, and we've been rallying, and I think we take equity markets higher today. All right, so look to buy the dips. I got a feeling today is going to be a low volatility, low volume grind to the upside. That's a market that we call in the business thin to win. It's going to be thin volume, boring rallies to the upside. You got to be super patient. Day trades of 5 to 6 minutes to pay you a full profit could take an hour. They're just going to go up very slowly, very little pullbacks, that kind of price behavior. You guys know what I'm talking about, kind of summer market behavior, but bullish summer market. All right. Overall, S&P 500 companies are expected to post second quarter profit growth of around 21%, according to a Bloomberg report. That's very strong. That's a pretty good expectation there. But again, with interest rates rather that have been going up, that helps banks. That's called NIM, net interest margin. That helps them kind of earn more revenue on their balances, because net interest margin means the percentage or the difference between the deposits you pay out on and the mortgage that you're able to lend on when you receive that cash. That's NIM. So NIM numbers are looking pretty good in the banking sector, and analysts are positive about this earnings season. So we could get a continuation to the upside. I'll tell you this as well. We could also break highs in the next 1 to 2 weeks. We could be trading a new all-time high in the S&P 500. We sure are trading a new all-time high on the NASDAQ. That's what, 74 now? So it's 7,400 on NASDAQ, new all-time highs. Russell is probably close to, if not at, all-time highs. I can't confirm because I haven't seen it. All right. It's not? All right. Fail. That was failed guess, but you don't want to be guessing with this stuff. Pull up your chart and look at Russell. So far, NASDAQ is stronger. It's leading the way. Look for that as correlation. When you pull up NASDAQ, and if it's going up, it'll pull the S&P 500 up. And if NASDAQ's going up, and you look at what stocks are driving NASDAQ higher, if that stock goes up, then NASDAQ will go up, and that'll pull the S&P up. So you got a lot of correlation to the upside. Stay with the trend. Don't fight it. All right. Here's a little update out of Johnson & Johnson. I found this pretty cool. Not cool, actually. I found this kind of disturbing. I don't know why I said cool. The polar opposite of cool. Johnson & Johnson, stock symbol JNJ, has been ordered by a jury to pay a $4.7 billion fine to 22 women. All right. These women allege that the company's talc-based products, like its baby powder and other kind of products around, I mean, these are all mothers. So baby powder and other such products contain asbestos and cause them to develop ovarian cancer. That's terrible. Yeah, the company's facing 9,000 cases. So think about it, do the math. Take 4.69 billion. Make sure you have a big calculator. Divided by 22, and that's the settlement per person. Multiply that by 9,000 cases. That's a potential bankruptcy. However, obviously Johnson & Johnson's denied the claim, saying that decades of studies show that its product is safe. assuming that it's studies that are funded by Johnson & Johnson, obviously, and has overturned a lot of their prior verdicts. However, this settlement by the jury saying, hey, look, these 22 women get $4.7 billion based on these claims, opens a precedent for these other cases to be reopened and for them to seek damages as well. Big trouble for Johnson & Johnson. That's not something you're just going to be able to brush off. I'm going to say that's a short. Look for rallies to short into J&J. Get some put spreads, and don't get obviously too excited. It's not a short. It's not going to zero. Take your profit on the way down. All right. As a short seller, you're not a long-term investor. The only type of long-term shorts are the ones that lose money. I wouldn't recommend you be that one. That's what I got for you guys today's morning market update. It's Friday the 13th. Be careful. Freak accidents can happen. Maybe tap a little bit lighter on your keyboard and mice today. I don't want no springs blowing up and hitting you in the eye, but it's Friday 13th. Be careful out there. Don't do anything crazy. Okay, Victorio? When you go out to party tonight, yeah, we're going out together. So crazy is going to happen. You guys have yourself a good day. Great weekend. Much love to you and your families. Thanks for tuning in. Monday morning, we pick it up again. Saturday at 3 p.m., we have our 10 2-year yield spread. Great video. And then on Sunday, I don't know what we're going to have yet. We're going to have something great. So see you guys on Monday. Take care. All the best. And good luck. Manage your risk. Trade Pro. Ciao. Time to spin around. Ugh. Oh, I shouldn't spin too fast. It is Friday the 13th. Careful. Thanks, Marky. Yeah, followed the window. And second floor. Who's gonna? Well, I don't know what's gonna happen, but yeah, that's true.